It seems that the market was boosted once again by some positive economic data coming out of Europe on the one hand, and then of course the US late into the trading day, retail sales data there rising by 1.1% for the month of February. Walk us through your views on the rally that we saw overall.
Hi, yes, indeed. We had a another strong day with a nice positive undertone. After the German data, we had the US data that came through better than expected. Overall, I'd say a strong day across the board. One or two pockets of weakness, but more stock specific than general sectors. Really, I think a lot of it's also positioning ahead of the derivative closeout on Thursday.
So how do you see that affecting the market, and how do you see that affecting trade tomorrow?
Well, really what it does one of two things. One, it does increase volume in specific counters where derivative players have risk exposures. Two, you also get a lot of futures activity that drives the underlying spot that ordinarily wouldn't be there. So it's really just a very short-lived feature in our market, and this is the time in which it really does come into play. Increased volatility is often the case, and increased volume is often the case.
So let's take a look at some of the pockets of weakness that you're pointing out. Harmony is one of the stocks that we saw falling back only by just over 0.1% though, indicating that further down the line it could be looking at a listing over in Hong Kong. And of course it's a company, or a gold miner rather, that is diversifying its asset base away from South Africa. Is Harmony a stock to watch further down the line for you?
Yeah, I would think so. I think the gold stocks seem to be have a better rating in certain foreign countries, especially in Asia, and it might actually lead to some sort of re-rating of the stock. So I would keep an eye on that, yes.
But in terms of overall exposure right now, because there's a lot of problems that we know the gold miners are facing in South Africa. We saw the latest mining data coming out showing that gold output fell by 11.3% in volume terms in January. So we see how the environment, strike environment, the cost pressure environment is hitting volumes. Would you have any exposure to gold equities right now?
I must be honest, I would limit my exposure to gold equities. The production costs and issues and difficulties do sometimes hinder your exposure to the underlying. I personally would prefer to have my exposure in the physical commodity.
Does your attitude or investment case for MTN change right now when you see the stock trading lower today, or do you see that just as a healthy breather in terms of the rally we saw? One of the stocks that we saw falling back today.
I see that as a healthy breather. It's had a really strong run since recent results came out, in which it increased the dividend payout ratio nicely. It has very strong cash flows, a very strong earnings growth outlook over the next couple of years. And yeah, it's one of the few areas where I think there's still value in this market.